Hi, good afternoon. Today is Sunday, September 15th, approximately, say, 2 o'clock Eastern Standard Time. My name is Olawale Okabolo with Spartacus Trading Corporation, here to bring you the prep report for the S&P E-mini futures contract. Going into, well, it's the prep report for September 16th, New York pit session open. Going to start with the monthly chart. This should be a very easy review. Where is my notes? All right. Starting off, we have a balance area. Well, the market is one time frame and higher now on the monthly. You can refer to my last report. That report was from Friday, I believe. Yeah, Friday the 13th. As I talked about the change that is attempting to go on right now. At least there's confirmed change on the monthly that we are one time frame and higher. You can review that report for more details. So we're one time frame and higher. We're in the middle of a 2 month balance area because we closed back in August. So we're currently in a 2 month balance area. I would really still be paying attention to this August high because that's the breakout from the 2 month balance area. Was paying attention to that going into Friday, going to Friday's pit session. We closed below, but nothing's really convincing, right? Because we finished off with an inside day. We'll talk about that soon. Going to the weekly, we are now in a 8 week balance area. One, two, three, four, five, six, seven. When we open, even though we got some geopolitical mess going on out there, we could open either back within this balance area. So I'm going to go as far as to say that it's an 8 week. I'm looking forward. Even though as the close of Friday at 7, I'm calling it an 8 week balance area unless we gap up and we go, then we're no longer in balance. We're breaking out of the balance area. Here's the balance area high. Make sure you make a notation of that because you want to be aware if we do break out of balance. Break out of balance represents change on a time frame higher than the day time frame, which means that one or two things: either we're going to break out and go, or we're going to break out and fail. So that will give you some kind of indication of where the money's being placed, at least in the on a time frame higher than the day time frame. There's nothing else I really got to talk about on the weekly. On the daily, it gets very interesting. We have another inside day. Please refer to my reports from report from September 6th. I talked about the inside day concept. Also, a report that I put out for September 3rd. I talked about how to play the inside day, so I'm really not going to go into details with that. You want to play the inside day, you want to go with the breakout from the inside day, but all bets are off when you get to the opposite extreme. So basically, it's just telling us it's balanced. The market is trying to find out exactly where it wants to head. More than likely, if we break out, you want the market to hold the gap below. If we break out above, you want the market to hold the gap above. Um, we got some news coming out of Saudi Arabia with the oil situation. I know the crude traders can't wait to get into the market whenever their pre-market opens or overnight session opens. I'm sure there's probably going to be some volatility as far as the ES. We might get some volatility from the crude, but we'll see. You know, everything that's going to play out is going to happen right in front of you. So it makes really no sense to speculate or guess. Well, we're all speculators in nature because we're trading, but sometimes it just pays just to hold off and wait and see kind of how things shake out. Bottom line is, with the news that we're getting, we should open up when the market does open up for the overnight in about 4 hours or so. We should at least open up either a gap above or a gap below, I believe, and then kind of let the overnight shake out going into the pit, and then we can have some kind of idea of what we want to look for going into tomorrow's trading session. So I talked about the inside day, looking through my notes. That's it. Let's go to the profiles. Uh, these are just references of where market can possibly test, giving you scenarios going into tomorrow's trade. Okay, if we do gap lower, Nothing's really serious to the downside. We got a spike base that we can hit, and then we got another double distribution, which these two things represent new auction. If we gap lower, if we're talking about some serious money is selling this market, well, the rubber meets the road at a former 2 month balance area. And coming back in here, as you can see from my notes, we'll make a third monthly test, and more than likely, we test down here. Uh, we get no acceptance above, we're going, and it's something serious going on that should get us into the gap entry, which is also last week's low, and then possibly look to fill the gap. But if we gap and the market just balancing here, really nothing's really going on other than some liquidation and attempted selling by speculators, but they're not getting much. The real test where the rubber meets the road for downside action, where more than likely you got some money behind the down move, is if we get below this reference here at this this multiple monthly 2 month multiple balance area high. So that's what I'm watching. Okay, to the downside. Other than that, I'll just take things as they come, especially if the market is going to show continuation. If we gap lower, I know what to look for. You should know what to look for. One time framing, lower value, expanding lower. If we gap up tomorrow, the first area you want to pay attention to is this 8 week balance area high. So anything going up from a gap you want to see, or the market opens up, you want to see some value overlapping the 8 week balance area high that I talked about on the weekly bar. You want to begin to see value overlap this reference, and then you want to see the market trade higher, and then there's the all-time high, so we're not that far from the all-time high. um, you want value to build higher, you want value to overlap, you want value ideally to overlap the all-time high to show you probably got a good trade going up. So that's really all I got. We could take a quick look at the actual profiles to see what the structure looks like. Um, a reason why I won't be too convinced, I'm glad we are looking at the structure. The reason why I won't be too convinced if we do gap lower and trade lower until we can break this and show some continuation, if that's in fact where the market wants to head going into the week or throughout the week. Um, this is, I think, a 20 something point day range, but the volume was like 4 billion. So the volume was okay for the range. So it's not like we're gapping and we're trading into a day that has a light volume. The volume looks light because this is before the rollover, right? This is the Z. I'm on the Z contract now. So this is before the rollover. So the volume looks light, but I can tell you the volume was not that light for a 20 something point range. The volume was okay. So it's going to take some serious money, some serious pressure, some serious fear, or some serious speculation to get us to just zip through this range and begin to test this low. Now, eventually throughout the week, we can drip, 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 and then go. I can understand that. But if it's a gap and go type of deal, I would probably think twice before I jump on the bandwagon to the downside, depending on how low it goes, because it could be oversold. You take it a chunk at a time going to the downside. You got a spike base you need to close. Then you also have a double distribution you need to close. If we get below this double distribution, then the market can begin to target this, really see what it wants to do going towards this former balance area high, monthly balance area high. So ideally, I'm not thinking that until this double distribution is closed going to the downside, right? So there's a couple of tests the market has to pass in order for me to now think about, is there something going on? And even if we get here, doesn't mean it's going to go. So there's a couple of elevator stops, let's say, for lack of a better word, that the market have to get through. Looking at the structure to the upside, again, it is what it is. It speaks for itself. If we got anything that where the market wants to go higher, now we're coming out of an inside day, so it should not be a problem. Hold on, sorry, folks. We're coming from an inside day, so we're gonna go. We should gap, and hold the gap. So if we gap tomorrow in either direction, no one should be surprised at all that we're gapping. The question is, can we hold the gap? If we can hold the gap to the upside, you want to see can value overlap this 8 week balance area high. Then you want to see if value can then begin to overlap the all-time high. If value's building clearly above the 8 week balance area high or the all-time high, and you're long, you probably got a good trade, especially if you end the trade early in the day. You probably got a good trade. You just want to watch for continuation, which would be one time frame and higher. All right, folks, without being repetitive, that's all I got. This is Olawale Okebolo with Spartacus Trading Corporation, where serious advanced traders come to train and learn. I hope you find this information useful and profit from it. Profit from it. Take care, everybody.